I'm Taylor Riggs in San Francisco in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, tech stocks on the move. The U.S. and China agree to phase one of a trade deal that includes intellectual property, and we're told phase two will cover data issues and cyber threats. Plus, simmering tensions, the strain continues to flare between Alphabet employees and management. We'll hear from a former worker who says they were wrongfully let go. And from digital taxes to drones, Prime Minister Boris Johnson cements his desire for Brexit with a sound victory in the UK. We'll discuss what it means for the UK technology sector. But first, our top story, and it is all about trade. The SOX index, which is a bellwether for sentiment, closed at a record yesterday, but today it's been underperforming. And that's unusual given the trade deal, and it's a sign that the market may be skeptical of this deal. Abigail Doolittle is here to explain what's going on. Abigail, what do we know about what is and is not included in this trade deal?
Well, one thing we certainly know, Taylor, lots of confusion on the day around the trade deal, and with it moves up and down for stocks. But what we do know, if we keep it super simplistic, one thing probably most important for stock investors and financial market investors is the fact that those December 15th tariffs are not going into place. So that's a big relief. We also know that the 25% tariffs on $250 billion worth of goods, that is staying in place. Those September tariffs of 15% on $110 billion of goods, those are being rolled back to 7.5%. So that's a bit of a compromise. I think some had been hoping for 0%, a full rollback there. And then in turn, China has agreed to buy agricultural goods from the U.S. President Trump is saying it's $50 billion worth. It could even be more, up from $20 billion. So net, when you take a look at stocks, the major averages flat on the day, not enough to produce some sort of a sell the news event, not enough to produce a rally. But to your point on the stocks, it is pretty interesting to see that they underperformed. That could have something to do with the fact that they were actually rallying on the week up about 4%. So maybe for that SOX index in particular, Taylor, that bellwether of sentiment, as you said, a little bit of a sell the news here on the trade deal agreed upon.
Abigail, I'm taking a page from your playbook. Come and take a look at a chart here that I'm showing inside my terminal, which is the S&P relative to the Shanghai Composite. And really, it's been U.S. versus China. Does anything about this chart change for you today?
Just a tiny bit, Taylor, and it's a subtle nuance. So as we talked about the other day, and you were just saying, brutal for China stocks there, the U.S. really dominating because that's the Shanghai Composite to the U.S. So since the beginning of the trade war, China stocks getting hit down about 10%. We have U.S. stocks over that time period up 18%. However, there does appear to be a small amount of bottoming. And in the Asian session, China stocks were actually up about 1.8% relative to the U.S. Let's call it up about 0.8%. But, one day a trend does not make. We'll need to see China stocks continue to rally more than U.S. stocks to make any sort of meaningful dent in that chart. Stay tuned.
Abigail, I want to push forward to Apple, which we're going to highlight in our next segment because Apple was excluded from a lot of those tariffs that you mentioned at the beginning of the segment. Gene Munster of Loop Ventures, a frequent guest on the program, said that Apple could be one of the best performers next year. How is Apple set up as we go into 2020?
That's a pretty bold call, I think, by Gene Munster of Loop Capital, only because when you think about it, this is a mega cap stock, more than $1 trillion market cap, up 74% this year, Taylor. So that's saying that you're going to have, the world's biggest company, or one of the biggest companies, rally in a big way after a huge rally. That often doesn't happen. So you really need some fundamental drivers. Relative to the trade deal, they certainly did benefit. They avoided that $150 tax per iPhone, plus not having their profits shaved by 4%, as Dan Ives thought could be the case. So that is positive. But now we have to really look forward. We are in their all-important holiday quarter. They really have to hit the numbers. This past year, if you recall, in January of this year, 2019, they cut guidance. So we actually this year have been on a series of low numbers. It sets up 2020 for easy comps, but they are really going to have to meet, if not beat, to get the kind of stock performance that Gene Munster is talking about, Taylor.
Bloomberg's Abigail Doolittle, thanks for joining us. And now I want to stick with more on Apple because the company avoided those 15% tariffs on its most important products like the iPhone, iPad, and MacBooks after President Donald Trump signed off on a trade deal with China. For more, I want to bring in Bloomberg Technology's Mark Gurman. And Mark, what do we know about how much this could now be a boost to the margins and the bottom line, given we've avoided now those 15% tariffs?
I mean, I don't really look at it as a boost. I look at it more as the status quo. So instead of having that potentially margin crushing hit to EPS, which estimates come in at 4%, there's estimates that this would cost, additional taxes on iPhones between $100 and $150 depending on the model, right? They're basically missing out on that, and that's a positive. So I think what you're going to see is that revenues are going to be in line. They're going to come in between 86 and 90 billion for the holiday quarter. You're going to see a smooth Q2 as well. And like Abigail said, there's going to be strong year-over-year comps because of that slowdown in the first half of fiscal 2019. So I think, all things considered, it's a positive and mostly status quo for Apple at this point because of that trade deal.
And Mark, we know that they weren't going to pass on an extra $150 to the consumer. They were likely going to either eat the cost, or I wonder if they were working on pressuring some of their suppliers to avoid the impact on their own financials. What did you get a sense about how Apple was maneuvering around this?
Yeah, I mean, historically, in terms of tariffs, and I know we don't have much history here, but it does apply to the Apple Watch, the HomePod, and the AirPods right now. What we've seen them do is they've raised prices in some of those higher-end models. Some of the more expensive Apple Watches, there's now a more expensive titanium tier, which raises the overall ASP and really gives back some on the margin side for them. Now you have the AirPods Pro, which are almost $100 more expensive. I guess $90 more expensive than the cheaper model that they still sell. So basically expanding the lines, wanting to get improved margins from the supplier side, but actually keeping the prices mostly the same for the consumer. I feel like if they've raised prices on the consumer side, what the customers are paying for, that would be a bigger hit than they're taking from margins being hit from tariffs in the first place anyways. So I think sticking to those prices is important.
And Mark, we do know that this is temporary. While, we would be waiting for an indefinite delay in the tariffs that right now isn't likely. Do you get any sense that Tim Cook's relationship is strong enough with President Trump that even if the trade fights were to continue, that Apple could be exempt given Tim Cook's relationship and continued conversations with the president?
Yeah, I mean, there's evidence out there that Tim Cook is one of the tech CEOs or one of the CEOs in general, American business, that Trump has a good relationship with. I mean, you see the whole Microsoft Amazon situation with that big, government cloud deal. He clearly does not like Jeff Bezos, clearly does not like the Washington Post and Bezos' ownership and that. And there's been a lot of speculation about Microsoft getting that deal, that Jedi contract as it's called, because of that. Whereas you see Tim Cook had that big, press conference with Trump. He stood there silently as Trump went off on Nancy Pelosi in the media. And I guess, that's a really bad look for Apple, but it paid off in the sense that there probably was some influence on the back channeling side from Tim Cook in order for the U.S. government to get a deal done with China in order not to only avoid tariffs for Apple, but for all the companies that would have been impacted by that, multi-$100 billion list of products.
Bloomberg Technology's Mark Gurman, thank you for joining us. And now I want to push this all forward to 2020. We're hearing about phase 2, more specifically about how cyber may be impacted. Let's bring in Bloomberg's Lisa Sebanius to discuss. Lisa, what are you hearing about phase 2 and cyber-related issues?
So what we're hearing is that IP theft is a really important part of this trade deal. What's interesting is that IP theft has been an issue for the U.S. for years. In 2015, under the Obama administration, the U.S. and China agreed to a norm that would stop IP theft for commercial gain. That was the last major deal we've seen on IP theft, which is, taking intellectual property through cyber means. And here we are again looking at a deal that would involve intellectual property again, and it will be interesting to see what the sides agree to.
Yeah, any sense of what is changing, what is in the talks as you take a look at a renewed agreement from that original 2015 that you just discussed?
It remains to be seen. What's interesting is that some say that, China has sort of ramped up that IP theft again. Some are saying that, there was a drop-off after the agreement, and then, in 2017, 2018, we saw additional IP theft. However, others say that, what China has been doing is sort of in the bounds of just the kind of espionage that nation states do. So, the Obama administration agreement was about IP theft for commercial gain. And the question is there going to be any kind of broadening of that terminology, or is it a renewal of that agreement? And so we're watching that closely.
Bloomberg's Lisa Sebenius keeping us updated on the 2020 trade progression. Thank you for joining. And coming up, the strain continues to grow between Alphabet employees and management. We'll hear from a former worker who says she was wrongfully let go. That's next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. The Communication Workers of America Union filed a complaint with the National Labor Relations Board on behalf of the Google employees who were fired in late November. They are arguing that they were the victims of illegal retaliation for workplace activism. Google, meanwhile, cited, quote, clear and repeated violations of data security policies as the reason for the termination. Joining us now from Boulder, Colorado, is one of those former employees, Rebecca Rivers, and also with us is Bloomberg Technology's Mark Bergen, who covers Google. Rebecca, I want to start with you, and thank you for joining us. Walk me through your complaint on why you think that you were fired for activism instead of the data security policies that Google seems to claim.
Yeah, of course. The data security policy violations are nothing more than a red herring put out by Google to try to silence us activists and organizers at Google. Many people at Google have done very similar, if not exactly the same things that we have done that are supposedly against these data security policies. If these policies were actually applied consistently across the board, you'd see a lot more than just 4 individuals being fired.
So, Rebecca, you would continue to claim that you never violated any data security violations, correct?
Well, I would say that the data security policy in itself is inherently flawed. It's extremely vaguely written and written in such a way that it can be selectively enforced in the way that Google executives wish. Explicitly in this policy, documents can be retroactively classified as need to know, which can therefore mean that anyone looking at any document can be fired for accessing a document that they legitimately thought that they had business reason to.
Mark, I want to come to you because you've been covering Alphabet. You've been covering all of this. What do you hear in your reporting about when those data policies were enacted? If it was retroactively, where are we in this?
Yeah, so we have a story out this morning about this. I mean, the company has said, and Kent Welker, its chief legal officer, has said to both employees and then publicly that it's a long-standing policy. Our reporting this morning suggests that the people we talked to at the company and some of the messages we've seen internally is there are a lot of employees that disagree with that. They feel like, to Rebecca's point, it's not been very made clear. They think that it's a newer version of a policy, or they've never heard of it before. And so there were a lot of employees that spoke up pretty publicly, at least inside the company, saying, "Hey, this feels very disingenuous to us."
I want to bring up Google's statement. We did reach out to them for comment, and they said that we dismissed 4 individuals who were engaged in intentional and often repeated violations of our longstanding data security policies, including systematically accessing and disseminating other employees' materials and work. No one has dismissed for raising these concerns or debating the company's activities. Mark, can you just sort of walk us through that statement?
Yeah, so Google has not confirmed, it said, with the employees that they've dismissed. This is something that the company has stuck with the statement. They sent that memo out to all their employees about this. They're sort of taking a firm stance. And, I think that what we talked about in their story this morning is Google has changed quite a bit from, arguably from the search engine it was 20 years ago and even a few years ago. And it's moving into more business like the cloud business, where they're sort of just more similar to Microsoft and Amazon, and we're seeing the leadership at least trying to impose a cultural change that reflects that change.
Rebecca, I want to bring you back in here. Mark brought up the cloud business, which has been a lot of some of the tensions surrounding the activism. What do you say to critics who say that, frankly, Google is paying you to do your job, not to be an activist investor, but paying you to create programs that reward shareholders, given that that is Google's mandate? How do you respond to that?
Well, I want to remind everyone that most Google employees are also shareholders, and Google has just as much of a responsibility to answer to our requests and demands than any other shareholders. But back to your main point, I think that sort of the culture at Google has been shifting a lot over the last few years, and a big part of that is Alphabet and Google's insistence on profits and driving profits. But it's coming at the cost of culture and worker rights and psychological safety. And I think that if they keep going down this road and disregarding workers and their genuine concerns over the company's businesses, that they will be pushing away a lot of the great talent. And in the future, Google won't be as competitive of a company to work at.
Rebecca, what would you like to see from this complaint? What's your end goal?
My end goal would be an acknowledgement of Google that they have taken some missteps in this process, and a commitment that they will, listen to workers' complaints, concerns about not only their psychological safety in the workplace, but also, what their products are being used for. None of these products at Google were made by a single person, and a single person shouldn't be determining who is and isn't allowed to use these products. It should be a collective decision made by all the people involved in this company.
Mark, this is not the first situation. We've talked a lot on this program about rising tensions, frankly, with all big tech, between management and employees. What is being done within Google to address some of the growing frustration about the culture change that's going on within the company?
Yeah, I mean, the company's told us officially, that they said that we continue to have a lot of different avenues, whether they're like formal and sort of informal, for the employees to raise issues that they feel either morally concerned about or sort of workplace, right? And that's certainly the NLRB has found that Google employees have a right to speak up about working conditions, and that's going to be like an important case, obviously, for these charges going forward. I think the company has, from what I understand, changed a little bit in previously, in some of the previous issues, the management has said, like, our door is open, come and talk to us. They met with some leaders around the Maven, which is the military project. As far as I know in our reporting, they haven't been as willing to sit down with some of the activist leaders right now at the company on speaking out around the issues that Rebecca talked about.
Thank you to former Google employee Rebecca Rivers and Bloomberg's Mark Bergen. And coming up, a car break-in that has left tens of thousands of people's data is compromised. We'll find out what happened next. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg. Facebook has been under fire for exposing its users' personal data. But this time around, it was the company's staff information that got out. Almost 30,000 Facebook workers had their personal banking data compromised last month when a thief took corporate hard drives from an employee's car. Here to discuss the incident, it is Bloomberg Technology's Kurt Wagner. It is like one saga after another. How did this happen?
Well, when I first found out about this, I kind of did a, like, you've got to be kidding me kind of thing, right? Because we talk about Facebook and personal data all the time, but never their own employees' personal data. This was a pretty kind of freak experience, honestly, from what it's been described, is that this employee who works in the payroll department had all of these hard drives, probably brought them with her to do work at home, either over the weekend or in the evening, and someone smashed the window of the car, grabbed the bag with the hard drives in it, and by the time Facebook kind of did this forensic analysis to realize what was on those hard drives, they realized, it was a lot of this personal banking information.
And a few things caught our eye. One was that hard drive data was taken out of the office into the employee's car, and Facebook has not really commented on the personnel details, but has hinted that isn't allowed, that it should have stayed in the building.
It is not allowed. Yeah, that was not policy, right? Employees should not have had that kind of personal data outside of the office, off of campus, definitely not unencrypted. So this was not only were these hard drives stolen, but they were unencrypted, which means that the data would be a lot easier to collect. So yes, Facebook did say that the employee was reprimanded. They didn't explain exactly what they meant by that, but obviously any kind of punishment probably was not very great.
This also struck my eye because Facebook said it was sort of a random freak accident, yet, and I know we're not law or crime experts, but the odds of someone finding an employee who they knew had that unencrypted data in the car and breaking into that car felt more real than chance.
Oh, really? I was kind of feeling the other way because I don't know, living in San Francisco for a few years now, it's not that uncommon to be walking by and see windows broken open. I know I've had a bag stolen from a bar just right down the street, believe it or not, and I can see how this kind of thing would happen. If it was someone who was targeting this employee, Facebook has not said that, by the way, for the record, but if this was the case, that would be a pretty impressive swipe.
So let's get back to Facebook here. What do they do next? We have the employee information that was stolen. What do we know about that data that was stolen, and what's Facebook doing?
Yeah, so because this was payroll data, it's pretty sensitive stuff. It was bank account numbers, the last 4 digits of people's social security number, bank routing, payment information, bonus information, so all the kind of intimate financial stuff that you don't want in the wrong hands. And obviously that poses some security risks to the people whose data was stolen. So Facebook is giving employees a couple years of identity theft software subscription to try and make sure that no one's trying to steal their identity. They encourage people to go talk to their banks and make sure there's no fraudulent charges to their accounts. But at this point, as you know, once stuff kind of hits the internet, if that were to be what happens here, you can't really get it back.
The saga continues, all things crime and Facebook. That is Bloomberg Technology's Kurt Wagner. Thanks for joining us. And coming up, it's my favorite part of the week. It's our weekly Tech Week in Review. We're breaking down Apple, skirting those tariffs, and that big Peloton short position. That's all next. This is Bloomberg. Bloomberg Technology. I'm Taylor Riggs. Now let's get back to our top story of the day, that interim trade deal signed off by President Trump. It means Apple and other companies avoid tariffs on their products. It averts 15% duties, which could have added as much as $150 on the price of your iPhone 11. Here to talk about this and all of our other top tech stories of the week, it is Dan Ives of Wedbush and Bloomberg Technologies, Alistair Barr. Dan, you are the king of Apple, so let me start with you. This isn't really a boost, but it's sort of maintaining status quo as it relates to margins and the bottom line of Apple.
Look, I mean, fundamentally, this was the biggest risk to the Apple story over the next year. It was a dark cloud over the stock. We think a $20 to $25 overhang. It would have been a major gut punch. This removed now, I view this as a green light. Stock could have a 325, 350 handle over the next year.
And Alistair, I also heard this from Gene Munster over at Loop Ventures, saying that this really could be one of the best performers next year, given all of these headwinds have sort of floated away. What is your take as you take a look at Apple and really the entire tech sector as we look at this potential trade deal?
I think the stock impact might already have happened to some degree. So the shares in the last, I would say, 3 or 4 weeks have really taken off as the confidence about a trade deal was building. So it might be a case of where you buy the rumor and then you sell the confirmation. The shares are doing pretty well today, and they're massively valued. $1.2 trillion is pretty incredible. Looking forward into next year, I think there's going to be new challenges that the company has to face if it's going to do another year where it goes up another 80%. That's going to be very difficult.
And Dan, I know we're all focused on the iPhone because it's half of the company's revenue, but talk to me about that other 30% margins or so that we know on the watch, the AirPods, the HomePods. How does all of that fit in as you take a look at Apple, despite their relatively or really strong balance sheet?
That's really the key here, and I think it's really a story that many miss this year is the re-rating of the stock because of that services business. Even you look at AirPods, we're talking, in our opinion, about 85, 90 million units next year. You put all that together, I think that services business is worth $600 billion. And then you look at some of these other, the watch, AirPods, other products. It's about that ecosystem, monetizing it. That's the golden jewel of Cupertino and Cook.
So, Alistair, I posed this question to Mark Gurman earlier, and I'm wondering if we don't get a broader trade deal, is Tim Cook's relationship with President Trump strong enough that Apple could get exempt from these tariffs even if we don't get a big trade deal?
I think if you look at the last set of tariffs that did go into effect in September, those hit things like the AirPods and the watch. Those already suffered for some tariffs, and the company tried to get tariff waivers on some of that stuff, and the results were really mixed from that. So they got a tariff waiver on the Mac Pro, which is made in Texas, made in the US, but the other things were still in place until obviously this deal, and there's now talk that they're going to roll those back at least somewhat. So I think if new tariffs do go in, it's going to be very tough to get full tariff waivers.
Dan, I want to switch on over to another big story this week that we were following, and it is all about the Facebook ecosystem, and namely Instagram. And Instagram stories now contribute 10% of ad revenue to the overall Facebook ecosystem. What does that tell you about our more and more reliance on Instagram?
Look, I mean, I think it just shows that continues to be probably the smartest, most strategic, acquisition that Zuckerberg's done, and I think it really feeds into that Facebook ecosystem in terms of monetizing it. And I think that's really the key in terms of what's happening on the platform. And I think ultimately, from an investor perspective, giving more valuation to that sort of the piece of the puzzle. And I think that's really a big reason why you've seen Facebook with the stocks done this year. And then this just puts numbers around it.
And Alistair, does this confirm that the advertisers actually did follow Facebook into that stories category?
I think so. So as you mentioned when we were chatting earlier, the stories is kind of a clone of what Snapchat has done, and so that was the first hurdle. Right, you have to follow user behavior on the web. People wanted to share these stories in this clever way, and then once they got people actually doing that on Instagram, then you have to come up with an ad unit that actually fits into that. And are people okay looking at ads when they're scrolling through these stories? And it appears that they are, and it's quite a natural thing to just look at an ad and then move on to the next screen. So it seems to be working well.
Dan, one more quickly here on Facebook. Your colleagues over at Bank of America put out a note in the last few weeks that Facebook should outperform Alphabet given the ad growth that we're looking at in 2020. Is Facebook where all the advertisers go?
Look, and I think that's the issue, is that despite all the noise from the Beltway, stock continues to move up and to the right because that's where advertisers are going. That's the monetization. And I think that's really been the key of the story. That's the high-octane fuel in that engine for Zuckerberg and Facebook.
Alistair, I want to switch to another story, and it was Peloton. Earlier this week, I spoke with Andrew Laft of Citron Research. He's a big short seller. Came out, was calling for a $5 price target or hitting that price target on the stock next year. Now, he is a short seller, so he's betting for those shares to go down. What are your thoughts on Peloton and the whole connected fitness? Is it technology? Is it fitness? What are we valuing these companies at?
I think that's a great question. So if I think technology investing, especially in with these huge platforms that exist, I think it's either a huge win that happens quite rarely, but then you might get like 10 times your money, or it's a big failure. So the comparison that Citroen made, which was interesting, he thinks that Peloton's going to be like Fitbit or GoPro. Which obviously have not done well at all. But if they're right, then they could become a kind of social online community around fitness, and that could turn out to be really big. I think the jury is still majorly out on that working.
Dan, I was speaking with Andrew Left earlier this week, and he said he's short Peloton. This isn't a broad-based call on connected fitness. As you take a look at the connected fitness space, we fold it back into your world of the Apple Watch, for example. Where do you view that sector?
Look, I think that's really where a lot of growth's going in terms of just streaming content connected. And even Peloton, I think many on the street view it really as a technology company in terms of the streaming component. I think you're going to see more and more companies sort of in this space. And you're going to have the haters out there. But fundamentally, the subscribers are really what the street's focused on, and a noisy, definite week for them. But I think if you look at that space, still in the first inning of playing out.
Well, no haters here on this Friday. That's Dan Ives of Wedbush and Bloomberg Technologies, Alistair Barr. Thank you both for joining us. And coming up, from a potential digital tax against the U.S. to drones, what UK Prime Minister Boris Johnson's election victory means for technology in the UK. We'll break it all down next. This is Bloomberg. UK Prime Minister Boris Johnson's victory in a snap election has put wind in the sails of Brexiteers. He now stands to complete the Brexit divorce that he began 3 years ago as leader of the referendum campaign to leave the European Union. Speaking outside 10 Downing on Friday, he said he's ready to begin the work of healing divisions.
We are going to unite and level up. Unite and level up, bringing together the whole of this incredible United Kingdom, England, Scotland, Wales, Northern Ireland, together, taking us forward, unleashing the potential of the whole country.
So what does the election result do to the UK tech sector? With perspective, let's ask Russ Shaw, founder of Tech London Advocates. He joins us from London, and on the phone from Brussels, Aileen Chauveau from the Center for Data Innovation. Russ, let me start with you. What changed this morning in terms of business clarity and confidence?
Yes, I think what changed is that we now have a higher degree of certainty about what's going to happen. We've been living for the past 3.5 years with a lot of uncertainty. And I think for the tech sector, that was problematic, particularly for earlier stage businesses who were struggling to raise investment. We now have that, and we now need to move towards a firm deal, which the Prime Minister said he will implement by the end of January. And I think that will be an important next step to further progress how the UK is going to leave the European Union.
Aileen, I want to fold you into the conversation. In one of your latest notes, you write that there's closure, but uncertainty does still remain. How did this vote today change your business as you take a look at entrepreneurs in the tech sector?
Right, so it really matters to the UK's economy what just happened to its tech sector. There's definitely going to be an impact. Even though indeed there's closure, we're still in an uncertain situation. Keeping in mind that the UK has a lot going on for itself, it's still the biggest EU tech hub, with nearly half of exports from the UK's digital sector going to the EU. The UK has 1,000 AI companies, various tech hubs and research centers. It has more AI companies and startups than France and Germany combined. And there's robust public and private investment in AI education and research. And investors are still voicing support for London as the best European location for AI brainpower and adequate talent. But the post-Brexit impact is still not very well understood. And a no-deal Brexit, for instance, would still see the economy contract next year. It's difficult to plan for this, and Brexit preparedness varies depending on company size. Many SMEs haven't taken active steps to prepare. And, Brexit can still make the UK less attractive to EU nationals. And there are delays in investment and tech decisions. And strategies include moving offices, development outside the UK, to be able to continue to easily attract foreign talent. So there's still
Russ,
uncertainty, I would say.
Yeah, Russ, entrepreneurs, it is all about human capital. What do you need to see from this government to attract foreign labor, clear up the visa situation, and clarify their stance on immigration?
Absolutely. Job one for the Prime Minister is ensuring that we have a fit-for-purpose visa and immigration policy. And one of the things that we are calling on straight away is to lift the cap on Tier 2 visas. The Tier 2 category is targeted towards skilled migrants. So we want to make sure that we're sending out a message globally that whether you're in the EU or beyond the EU, that you're welcome to live and work in the UK. And on top of that, we're also saying it's critically important to invest in the digital skills talent within the UK with a focus on women and the Black and minority ethnic community. So it needs to be a combination of overseas talent and a great and clear immigration policy coupled with investment in digital skills. There is a national skills fund that has been announced. It's a £3 billion fund. The government has said that they will launch it in 2021. We'd like to see them launch it as early as next year so that we really start to take further uncertainty out of the sector as it relates to talent.
Aileen, we've talked a lot about the digital tax, namely being led by France, but there's an OECD effort underway. There's a European effort underway. Where does the UK stand in terms of a digital tax, if it would line up more with the US or go more towards an OECD rule?
Well, that is difficult to say as well, actually. So regardless of Brexit taking effect, the EU can be expected to proceed with proposals like the digital tax, although we're waiting for an OECD agreement, to advance certain rules, achieving a harmonized market. So it will be perhaps up to the UK to decide for itself whether to follow or diverge from EU rules. But the path chosen will definitely affect a business's decision whether or not to launch online services in the UK. And let's also mention the big concerns over data flows in general. And the Brexit can potentially limit the skills of companies by limiting, access to markets, data, and talent, which are critical in the digital economy. The UK could find a third way between the US and the EU. They've done that, for instance, with data trusts as models for data sharing and data access. But it will definitely be up to the UK to see where they decide to side.
And Aileen, give me your thoughts on the Huawei ban that we have here in the US, proposals for 5G. Where does the UK stand when it comes to that 5G?
Well, they're still trying to decide as many member states because this is very much an issue. Europe is trying to find a way to develop its own technology, its own tech sector, and this means going for a narrative that they call technological sovereignty. And here again, it's also up to the UK to decide to what extent they want to work with transatlantic allies or Chinese foreign firms, including 5G suppliers. And it's difficult to want to be in a free market, but also to want to make sure that you provide secure services to consumers in the digital economy. So that will have to be seen, yeah.
Yeah, thank you to Russ Shaw with Tech London Advocates and Aileen Chavot from the Center for Data Innovation. And it's still ahead. It may not be HQ2 in Long Island City, but Amazon is still coming to New York. We'll hear and we'll speak with one of HQ2's most vocal critics, New York State Senator Michael Gianaris. He's next. This is Bloomberg. Let's take a look at today's top tech calls. Shares of Adobe jumped on Friday after posting fourth quarter sales that topped estimates. Several analysts boosted their price targets on the software developer, specifically praising the performance in digital media. Christmas came early, the Jefferies analyst wrote, while raising his price target to $370 a share. Broadcom surprised Wall Street by referring to its wireless business as a financial asset as opposed to a core one, which analysts said raised questions about the company's commitment to that division. The commentary leaves us admittedly confused on the shifting core focus, Cowen wrote to clients, with multiple firms suggesting it could be an indication that Broadcom is willing to sell the business. And Snap was upgraded to market outperform from market perform at JMP Securities, which wrote that it had had higher confidence in the social media company's ability to grow its user base and improve monetization. Since the start of October, Snap has received upgrades from Morgan Stanley, B of A, JP Morgan, Needham, and Loop Capital. And those were a look at the top tech calls. Now, months after Amazon pulled its HQ2 plans, the e-commerce giant has signed a lease for 335,000 square feet of office space in Manhattan's Hudson Yards. But with that comes just 1,500 jobs. It is a far cry from the 25,000 that the company claimed its HQ2 would have brought. And this time around, no $3 billion in subsidies. Something like that has critics like New York Representative Alexandria Ocasio-Cortez taking a victory lap, tweeting, "Me waiting on the haters to apologize after we were proven right on Amazon and saved with the public billions." Now, I sat down with one of HQ2's biggest critics, New York State Senator Michael Gianaris, to see if the new deal was indeed vindication.
We had said from the start that giving that large a subsidy and incentive package to a company that didn't need it and frankly needs New York was a total waste of public resources. And now we're seeing that, in fact, they are starting to come here regardless. And a lot of people are saying, well, this is only 1,500 jobs versus a lot more that they were talking about earlier in the year. But this is just the beginning. And in fact, the promises that they were making earlier in the year only called for 700 jobs in the first year of a 10 to 15 year period. So they're already ahead of pace of what they were committing to do back then. In their own statement announcing these 1,500 jobs, they even said that this is a situation where they expect to continue to grow. So fast forward a decade from now, you will see that all those jobs are here in New York. All of that tax revenue that was supposed to be generated will be generated anyway. And in fact, we will not have had to provide this massive, unprecedentedly large subsidy to get them here.
So you're confident that they still will bring in 25,000 jobs?
Well, I'm confident that they have to keep up with their competition. Google is adding 20,000 jobs. Facebook just opened an office space twice as big as what Amazon just announced. Instagram is growing jobs here. The tech talent is in New York. Amazon knows this, which is why they were always going to come here. The problem here is the people that made this deal with them on behalf of the people of New York underappreciated what New York means to this company and to this industry. So they were coming here. What the exact number of final jobs is going to be is not up to me. That's up to them. But I have confidence it's going to be a lot and a comparable number to what they were suggesting earlier in the year.
It's also, though, about high quality and high paying jobs. In the original plan, Amazon was talking about how a lot of the jobs would be at least $100,000, 6 figures. Are you confident that we're still getting high quality, high paying jobs?
Yeah, all the conversation you and I are having and that people are discussing, whether it's the original deal or the announcement last week, is about not warehouse jobs. We're talking about office jobs, white-collar jobs that are higher paying. Again, Amazon is not telling me exactly what they're paying their employees. I'm probably the last one to know what their specific plans are, but I do have confidence that they will be seeking the tech talent that exists in New York, and those are the jobs that tend to be higher paying.
It was interesting, though, that they signed a lease at Hudson Yards, which is in Manhattan. Wasn't the whole point of this to develop underserved areas like Queens, like Long Island City?
Well, if you've set foot in Long Island City anytime in the last couple of years, all you see are cranes putting up buildings. So the notion that Long Island City is underdeveloped is a complete disconnect from reality. In fact, it's overdeveloped and people are having a tough time affording living there. That's one of the big problems we had with this proposal to begin with, is there was no concept of what it was going to do to the housing market and the displacement it was going to cause among people who already live in that community. Hudson Yards is just a couple miles away. It's across a 2-mile span of the East River between Queens and Manhattan. It's probably less than a 30-minute commute to go back and forth. So the notion that somehow doing something on one side of the river is worth $3 billion in subsidies versus doing something on the other is a complete misappropriation of public dollars. I certainly want jobs in Queens, and by the way, jobs are coming to Queens and to Long Island City. The first building Amazon was supposed to occupy was full with new commitments of tenants within a matter of weeks from when Amazon said they were no longer coming. So the jobs are continuing to grow. The growth is organic, and it will be done at a pace that the community can plan for and hopefully preserve the housing stock, make sure the infrastructure can handle the growth that's continuing in that part of Queens.
Governor Cuomo's office has repeatedly said that they don't have any records of conversations with Amazon as they were trying to negotiate that deal. The Wall Street Journal was filing a Freedom of Information request, and they said they have no records. What do you think the governor is hiding?
I really don't know, but if they weren't negotiating, then who was? Somebody was talking to Amazon along the way. It is strange that they're producing no records of any such communications, because there must have been communications with somebody about the deal that was ultimately produced. Most people in that community thought it was a bad deal. Amazon walked away, which I think was to the benefit of the people of New York under the terms they were discussing, and now they're coming without the subsidies. So I think this is good news all around.
What was the last thing you ordered on Amazon?
You know, I canceled my subscription back about a year ago, so I'd have to go back and think about it. I don't know, probably toilet paper or some household product that I actually
Why did you
needed.
cancel? Why did you cancel?
I thought, given the fight we were in, and the more I learned about Amazon and how poorly they treat their workers, I was not interested in lending my dollars to support that company, which doesn't seem to have an ounce of social responsibility about it.
That was New York State Senator Michael Gianaris. And that does it for this edition of Bloomberg Technology and Bloomberg Technology's live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg.